What is up, everybody? Thank you for joining me for another CPI live reaction. That's what we're going to do here today. So let's just jump right into it, talk about some stuff leading into the CPI, and then we'll get into that. Let's take a look at the Bitcoin price first. Pushing up here on the 50-day moving average, if I bring that up, and this in the blue. And the way I think of it is every time we test a certain level, this being a 50-day moving average, it chips away at some of those asks and bids that are, the market orders that are around the 50-day moving average. And eventually it will break to the upside here if we test it multiple times. It works the same on the downside as well. If you test support multiple times, it chips away at that support and it will eventually break to the downside. Okay, so CPI is on schedule for today. This is the website. That is bls.gov/CPI. We're going to read right off of here. Remember, last month in June, it was a negative 0.1% month over month. That is actual price declines. It's not necessarily deflation, and going up is not necessarily inflation. Remember, inflation must be strictly defined as a rise in the money supply, and deflation must be strictly defined as a fall in the money supply. We can't jump off and bite in different directions, because then your analysis gets really messed up, because we can't have price rises for when deflation occurs. So the credit contraction, more scarcity of supply in certain items, and prices can rise. But the proper diagnosis is the deflation that's occurring, not the inflation that's occurring. So anyway, we will be reading through that. Let's go into what I have said. I did write about it yesterday in the premium content. You guys can check out bitcoinandmarkets.com, become a pro member, professional tier, and you can get access to that. I also wrote about it on the fundamentals report. So let's jump into that. This is the free weekly newsletter that goes out every Monday. And let's go down here to the CPI and just see what I was talking about. So yes, I'm live streaming. Bank of America is forecasting 0.3% month over month. That's pretty high. The Cleveland Fed inflation nowcast is 0.24. I'm taking the under as usual. If CPI comes in at 0.1 to 0.2, I've seen other places where the consensus is 0.2, even though Bank of America here is 0.3. So I think it will come in slightly below that, but we'll have to wait and see. If it does come in below, in the range of 0.1 to 0.2, there will likely be a rally in Bitcoin and the stock market, because participants will anticipate Fed cutting in September. I think both want to rally right now, but we are holding back due to elevated uncertainty at the moment. However, anything under 0.1%, so if we get another negative print, that's going to be interpreted very badly by the market, in my opinion, because it's going to mean that recession is getting very close. Okay, so that's what I wrote about that. Let's jump over to the Fed Watch. This is CME's product, Fed Watch. And this is what the market is pricing in right now for cuts. You can see this is the September meeting. More than 50% chance of a 50 basis point cut. That's pretty impressive. We'll see how this moves with the CPI, but 49%, there's 100% chance of a cut. 49% that it'll be 25 bips, just a single solitary unit cut. This is what the Fed uses as their units, is 25 basis points. A 2-unit cut at 50 basis points is the majority right now, but just ever so slightly. So we'll see how that is affected. All right, this is the Zero Hedge preview for CPI. What's up, guys, that you are watching? It's hitting 100 viewers right now. If you're watching on Twitter, jump over to the YouTube or Rumble and like, comment, subscribe over there. Trying to grow the YouTube and get it monetized. So appreciate you guys joining me today. All right. We have approximately 4 minutes till the CPI drops, so let's read a little bit through here. 1 month ago, when previewing the June CPI report, we said that based on the barrage of leaks by the Fed's mouthpiece, Nick Timiraos, That's funny. They call them Nikki leaks. It was only a matter of time before we got a big enough miss to trigger a September rate cut machinery. Specifically, this is what we said. With Nick Timrose having published not one, but two September cut previews in 24 hours, the writing is on the wall. While the Fed may not cut in the July FOMC meeting, it will make it abundantly clear that a cut in September is assured, which also means that tomorrow's CPI number is virtually assured to come in line or just below estimates. It's also why, after coming in hotter than expected much earlier in 2024, tomorrow's CPI print will be the third consecutive miss to the consensus estimates. Yeah, and in the post that I put out, the premium post, I went through and looked at that Cleveland Nowcast and looked by how much they missed over the last 3 CPIs, and it averaged 0.1%. So they're up 0.1% above in the last 3 months from their prediction to the actual CPI. So if that is the case, we're going to come in at about 0.14%. So we'll have to see how that goes. And it was a miss. And what a miss. Declining 0.1% month over month, most since June of 2020. Justification for the Fed's latest dovish pivot at the July FOMC, which together with the dismal payrolls report in a few days later, prompted an aggressive spike in rate cut expectations. And we just took a look at those from the CME. So now the Fed's mandate autopilot is far more attuned to general economic slowdown. Jobs have been very bad recently. Unemployment has ticked up. The SOM rule has been triggered. We had an uninversion in the 10-year. If we go to take a look at that here real quick, we have 2 minutes. So that's enough for the preview. Let's take a look here. Share this tab, and we'll go into this inversion. And you can see that intraday, we did go above, we did uninvert intraday, but we have not closed in an uninversion. But that is a trigger for when recession is coming. Of course, the 3-month 10-year is very far from uninverting, but we were looking specifically at the 2-year 10-year. This is the longest inversion in the history of studying this. So, okay, we are 1 minute away. Let's share this tab. Again, I'm taking the under. We'll see how that goes. Okay, continue. Blah, 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 blah. Okay, close out that. I am live streaming on YouTube, Rumble, Telegram, and Twitter. If you're on Twitter, jump over there to YouTube and Telegram. Like, comment, subscribe. I do have, if you go to this week's fundamentals report, you can see members free month for signups. So you guys, if you want to just support the content for $5 a month, you want to check out what it's all about, you can get a free month by using the link in the report this week, as well as if you want to become a professional tier member, you can get a free month there as well. Okay, 8:30, and we will refresh. Nothing. Refresh again. Nothing. Give it a couple seconds here. Refresh. Nothing. July, there we go. CPI for all items rises 0.2% in July. Shelter up. Shelter up. That's interesting because we've been watching shelter creep down over the last couple months, and that is the one remaining component that is pushing this higher. However, 0.2% annualized, right? It's just over that 2% target. Year over year CPI will come down. So let's jump right into this. Like, comment, subscribe. I will be looking at the comments here in just a second. So, okay, consumer price index for all urban consumers increased 0.2%. We'll have to see if that's rounded up. This could be 0.15 because in these releases, they only do 1 decimal, but they actually go out to 4 decimal places, I believe. So we'll have to see how this shakes out. It could be 0.15, as low as 0.15. So, on a seasonally adjusted basis, after declining 0.1% in June, over the last 12 months, it increased 2.9%. So we're under that 3% threshold. Year over year number did fall, which is important. This is right in line with expectations. So there probably won't be a bunch of crazy stuff going on in the markets, but we'll check that in just a second. The index for shelter rose 0.4%, accounting for nearly 90% of the monthly increase. Okay, this is very important. Shelter accounted for 90% of the monthly increase. It had been coming down. I've said multiple times that shelter does not have a mind of its own. It will eventually follow the other components. There's also different things. So they use owner equivalent rent, and they also have a rent component. But PCE, CPI, they both look at shelter with a different methodology. Okay, and the way that the CPI is going here, this shelter rose. We will see how that works out in the next couple months. Of the monthly increase, okay, the energy index unchanged after a decline the 2 preceding months. The index for food increased 0.2% in July. Anecdotally, I've been noticing food prices actually leveling off or even coming down in a lot of items. My kids are finicky, so they have the same items that they want. And going back to the grocery store and getting the same items, I've noticed a tapering off in the price increases and even a decline in some items. The food away from home rose 0.2%, same. Okay, index for all items less food and energy, so this is core, rose 0.2% in July. So annualized, this is not the 2% target yet. To get 2% on an annualized basis, when you look at the month over month number, it has to be 0.17. 0.17 will get you to 2% after rising 0.1% the preceding month. Indexes, which increased in July, include shelter, motor vehicle insurance, household furnishings and operations, education, recreation, and personal care. Okay, 12 months, 2.9%. This is the smallest 12-month increase since March of 2021. So we continue to come down on a year-over-year number. Month over month, we have been post-GFC normal relatively. Okay, this is, if we go back to 2020, a lot of people were talking about, oh, super high inflation. We did get some high inflation driven by supply chains. And I was saying transitory the whole time. Okay, now it depends on your time preference, what you consider transitory. I'm a Bitcoiner, gold bug prior. I have a very low time preference. And 24 months is nothing. Even 36 months is nothing. It is transitory because of the way that these things move through the economy. There's already a built-in 12-month delay because you have the way that the year over year is calculated. You know, it takes a long time for that first month to get priced into the total. And then as it's working its way out, it takes 12 months to get it out. So there's 24 months already. Then you start talking about the rent component or the shelter component, which is a big lag on top of that even because, you know, you only sign a new lease every year. And so that is going to have an additional lag, bringing it out to roughly 36 months. And so, yeah, we can see this here, that this is the smallest 12-month increase since March of 2021, which is a little bit over 36 months, a little bit over 3 years. But, you know, low time preference, this was going to be transitory the whole time. And people that were screaming from the rooftops that the sky is falling and inflation is going to stay higher for longer, they were dead wrong. Wrong. Same with the people calling for $200 oil. They were wrong. Don't let them get off easy. Why would you trust them now with what they're saying? If their models and their theories were so wrong that they 180-degree missed the transitory, they even made fun of it. They didn't just miss it. They made fun and laughed at people for calling it transitory. Look, we're at 2.9%. Going into recession, what happens in recession? CPI comes down. Okay, this is going to come down, continue to fall. So these people not only got it wrong, they mocked and laughed people for calling it transitory. And I'm here saying, no, it's going to be transitory. You don't understand how the system works. And what, lo and behold, it's transitory. It continues to come down, now under 3% year over year, into the 2% range. All right. Boy. All right, let's take a look at the table. We have July month over here. And so let's take a look. Energy 0, unchanged as it said. There are some big negatives like this one right here. Utility, piped gas service, negative 0.7. Used cars and trucks, negative 2.3. That's pretty big. And then we come down here to shelter, 0.4. Now, we'll have to see what happens next month, but 0.4 has been the consistent number. We dipped down to 0.2. Or is this just a blip coming back up? I see a lot of people on my Twitter feed saying, oh, the housing market's going to crash. The housing market's going to crash. Well, this isn't saying that. Shelter is blipped back higher. So we'll have to wait and see on that, from 0.2 to 0.4% this week. Again, that's 90% of the increase, because the way that they weighed it, a third of the index actually comes from shelter. So if this is high, that's going to be a high percentage. If this is low, it's going to be a low percentage. Okay, let's see how markets are taking it. And we'll go back to take a look at Bitcoin. Bitcoin touched the 50-day again. Looks like it's kind of trying to decide where it wants to go here. It's been 8 minutes. So we initially had a good reaction off of this CPI, but we were kind of forming this pattern to already go up. Let me take these moving averages off. And now we're getting a little bit of a retrace. We'll see. Market moves tend to be counter, like the initial reaction tends to be counter where the day ends up, but we'll have to see with that. Again, this was as expected, right on target. So maybe the market won't move much. Let's take a look at futures. I have futures delayed, so I can't take a look at that for the stock market until 6 minutes from now. But let's take a look at oil. Oil is recovering a little bit off this drop, not anything big. US 10-year spiked up. We will see where this goes. If we go to the daily here, and let me fix this axis. We'll go to 2 decimals. So this was a big bottom, in my opinion. And same with the 2-year. If we go to the US 2-year, it's even more blatant on the US 2-year. I mean, this RSI hit a 12 on the daily. That is extremely oversold. A little bit of a bounce here today on the CPI news, but again, as expected. So we shouldn't expect too much in way of market volatility today. This is ticking. So let's see, but that's not the S&P 500 futures, since it is delayed. I think it might be delayed 10 minutes. So let's see. Let's go. I don't know exactly what the delay is. 10 minutes must be 10 minutes, because look at this 5-minute candle. Boom. It's reacting positively, first negatively with this big wick, and then positively. Oversold on the 5-minute. If we go out to the 15-minute, I'm getting oversold on the 15-minute already, and back to the daily. And daily looks nice and strong. If we go to the S&P 500, which doesn't open for another hour, but you can see some of the stuff I was looking at. There was a significant gap here that was filled by yesterday and broke through that 50% retracement, coming up here to the golden pocket, which is the 61.8 retracement. I'm thinking we'd go to all-time highs again on the stock market. This was panic. I called it at the time. I said, this is panic. This is oversold. We got a bounce here. The 2-year, the 10-year, all these things were extremely oversold. And so I was calling for a bounce right near the bottom. And that is what has occurred. And again, if we go back to the futures that are open right now, go back down to the 5-minute, we see that the market has reacted. We got a Darth Maul candle here. Well, it's technically green, so Darth Maul's red, right? Saber was red. Okay, now it's red. So I take the colors off of my chart because of emotional emotions. Try to take emotions out of it. Green and red will, get your emotions going. Of course, I don't trade very much anymore, so don't have to really worry about that. We are getting some ticks here, some volatility in the ticks, but this is the 5-minute chart. All in all, very unchanged. All right, let's take a look at comments. Guys, put your comments down below. This is a rare time for me to be live streaming. I do live stream the CPI and FOMC decisions. Let me take a look at Telegram. Any comments over here? No. All right. What other news do we have? Well, we have this tweet from British Hodl. We can just jump over there and see what's going on. Since CPI was kind of a letdown a little bit on consensus, we'll have to see if that comes in. Let's do USIR MM. That's the month over month. Okay, we'll go to daily. Let's see, what did it come in at? On TradingView, it doesn't show the exact thing, but okay, back to British Hodl and what he's talking about, that Goldman Sachs has said that they have bought or declared a position of 500 million in Bitcoin. I put that out for people to hunt around on Telegram, and this is what they came up with. Let's go to this link. After market closed today, so when was this out? Yesterday. Okay, Goldman Sachs filed a 13F disclosing the following positions. 238 million in iShares, okay? 79 Fidelity, Grayscale, Invesco, Bitwise, blah, blah, blah. These are all new positions as of this quarter. Very, very interesting, guys. So they have opened up a sizable position. Of course, it's minuscule compared to their assets under management, but this is significant. $500 million in Bitcoin exposure is big time. Now, all of these 13Fs, this will start happening as we go quarter to quarter. These 13Fs will trickle out. Like last quarter, we saw Wisconsin Pension Fund. They actually invested up to 2% into Bitcoin. Now, this is going to be seen by everybody because it's all these public filings, and it's going to just convince more and more pension funds, more and more people to start going into Bitcoin, and it's going to have a domino effect. So these, around these 13Fs, we could expect to see significant upside to the price as they trigger more and more people to get in. But okay, let's go back to the chart, Bitcoin chart, and see where we're at. I kind of want to just take a look at plain chart here. Okay, again, not much reaction to this CPI drop, 0.2%, unchanged really from consensus forecast, up month to month, but we'll see. It's 90% came from Shelter. Shelter is refusing to fall here, but we will see how that goes. All right, one more check for any comments. If you guys are watching over there on Twitter, jump over to YouTube and Rumble. The links are in my pinned tweet and also in the tweet that I just put out a little while ago. Like, comment, subscribe over there. I'm trying to grow it to monetize that YouTube channel. And yeah, I live stream 3 times a week. I put out a ton of written content. If you go to bitcoinandmarkets.com, that's where most of my written content is. And every week, come out with a free weekly newsletter. It's the most comprehensive Bitcoin industry letter, in my opinion. I also have the premium tier, and you can become a member. And when you become a member, you get the chance to, not only when I put out some blog posts, I give them just to members for the first few days and then go public with it, but you also get the price forecast competition. So here is the August price forecast competition. All you got to do is enter and put your guess for the monthly close, and you can win $20 in sats. That is, entries are open on that for the first 5 days of the month, and then that closes, and then we wait and see who wins that. But that is for the $5 a month member. So if you win, you pay for 4 months of your membership, which is pretty cool. So check that out. Again, if you go to the most recent fundamentals report, this was fundamental report number 300. You go down here and you get a free month as a member, $5 member, or as a $15 professional member, you get the first month free as well. So trying to grow this, guys. Get out there, support good quality content. I've been podcasting or live streaming, whatever, for many years and never sold a scam. I just shared a video of Raoul Paul and Wealthion, Scaramucci, in Telegram, and Spag had a funny comment. He's like, "Why do you do this to yourself, Ansel?" Because I don't agree with any of what they're selling. You know, they're all bullish on all these scams and stuff, but they have a huge following. And guess what? Content like mine that has been right about transitory, right about the dollar, right about Bitcoin, right about gold, right about China, right about the scams, that they're just scams and they're going away, right about NFTs not being valuable, right about all these things. And they get 100 times the viewers because they're selling scams. People want to be scammed, I guess. That's what it comes down to. People trying to sell to get rich quick. Bitcoin is not a get rich quick. It's a get rich slow. It's a low tide preference. Hold on. It's going to go up. Okay. Bitcoin is number go up technology, but you just have to be able to hold it, learn about it. As you learn more about Bitcoin, you learn about yourself. You learn about your position in the world relative to the history of money, relative to the economic history of the world, relative to other people, relative to all sorts of things. You become spiritual and philosophical because it is such a deep subject, and the rabbit hole goes as deep as you want it to. And that's what we try to discuss here on Bitcoin and markets. So thank you guys for joining me. Let me check one more time for any comments. I've not seen any come through. So thank you guys for joining me. I'll see you guys on the next one. Peace.